Welcome back. It's Andrew, your crypto guy on the internet, and I have been working on a new trading strategy using the yellow X from Market Cipher. This symbol is exclusive to Market Cipher A. No other indicator can show you this, so you can only do this strategy with Market Cipher. It's something I noticed with how the yellow X behaves with price action, and I go, that's a good idea. But I haven't seen anyone else cover it in depth before. Let me just do a little experiment. I'm going to put $2,000 in a LevX trading account, and for a whole month, all I'm going to do is trade this yellow X idea that I have. And at the end of the month, if I do well, I'll make a video about it and show people how it works. So I started with $2,000 a month ago. I now have $4,300. And I'm upside down in a few trades, but believe it or not, that's part of the yellow X strategy. So what does the yellow X mean? It means market manipulation. And in my intro to Market Cipher video, I kind of had to cover everything a little bit. And so I said, yeah, the yellow X means market manipulation. I don't know exactly what's going to happen. I don't recommend trading a yellow X. And then I moved on. That's what you tell a new person. Because I was just focusing on the core strategy for Market Cipher, which is still awesome. I still use it. But for this month, I was just doing this yellow X idea I had. Every time you see a yellow X, the price at some point goes back to that number. I consider that clearing the yellow X. Clearing the X. So the price action either returns to it and surpasses it with strength, or it just flash wicks to it. So let's see how long it took to clear this X right here. Nearly 9 hours to get back to that price. But we know it's going to get there at some point. And what about some other yellow X's? How often? Oh, that one was right away. This is on the 5-minute chart, by the way. These got cleared right away. This one had some time. Dump, 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 and then return to it. So what's happening is the market maker or some whale is artificially pushing down the price to take people's liquidity, to stop them out of their trades. They take that money and they springboard back up the other direction with it. So the whale's making money going down and up. And normal people with honest strategies are getting caught up in here somewhere and getting stopped out. Even if you're in a short, oh, we're going down. No, you got wrecked too. Everybody's getting smashed by these yellow X manipulators. But what if we work with them rather than against them? The price seems to always return. Now, there's no guarantees, but it's like 99% accurate. I'm going to try to find one that it doesn't return to. The price always goes back to it. And look at this. This is a scam wick right here, but that technically counts as a clear. So this one got cleared right there, 3 hours later. But if you're on a different exchange, maybe that wick didn't even happen. And so you actually got this much time till it returned, 15 hours. So if I know that there's treasure in this cave, the question is, can I manage my resources to make it to the end of that cave, to return to that price? Now, if I see a dump and I jump in somewhere, I don't know how far the dump will go. It could go on much deeper, and I don't have the margin to support it. So if I'm going to go into a cave and I know there's treasure there, I need to manage my resources. Manage my resources, because I don't know how deep the cave goes. As long as I can stay cool, I'll find that treasure at the end. Let me find an example that could catch you off guard if you're not managing your resources. Okay, here's a big one for you. Now we're on the 5-minute. I don't recommend doing the yellow X strategy with leverage unless you're on the 1-minute or the 5-minute. The smaller the time frame, the better. On larger time frames, it could take weeks before you return to the yellow X. So don't do higher or mid time frames yellow X strategy with leverage. If you want to, like if you see a yellow X on the daily or the hourly or something, let's see if we can find one. Like here's one right here. If you're going in with leverage, I mean, we dumped 16% after that X. And if you have 10X, 20X, you just got destroyed. So if you're on a higher time frame, let's say the 4-hour, for example, you see these yellow X's, just do spot. Like buy a little spot, set a sell order at your yellow X, and then just sit on it for as long as it takes. So in this one, let's see here. Yeah, I don't know when this is going to return to this price. Could be a long time. But these orange lines are uncleared yellow X's that I've marked for myself on lower time frames. And these work as price targets. So here's a brutal one too. We got to go all the way back up. So what time frame was this? I don't know if I can even scroll back this far on the 5 minute. But if I marked it, it was on the 1 minute or the 5 minute. This is the worst case scenario. But even then, it's not unheard of. We've been to that number before. So I know at some point we'll come back to this number. So if I was sitting on some spot Jasmy, I know that at some point we're going back to 3 cents each. So you buy far below that and wait, and you generally are pretty good. Considering how often these yellow X's get cleared, that's a pretty strong bet, I would say. But this is a degenerate channel. We like doing leverage, so we're going to stick to low time frames. How do you position yourself and manage your resources? Well, here's an example of one that I entered. So I noticed some uncleared yellow X's. Now this is on the 5. Some of these are marked on the 1 minute, so you can't see the X on this chart. But just know that if you see an orange line, I marked that as an uncleared yellow X. So I go, okay, we're dumping. I need to see at least like a 2% dump after an uncleared yellow X before I start getting interested. So knowing me, I entered right around here. This is when I started the position. Going, all right, we're going to return to that. This is good. We almost made it and dumped again, and then Bitcoin fell and kept going down. Fortunately for me, I foresaw this possibility. So if I'm willing to throw like $500 at a trade, I don't open with $500. I don't sprint into the cave. I open with $100 when I first start. And then I give myself alerts. So let's say I entered I started right here on this green line. That's my first entry. I go, hey, if it falls again, like another 2%, then notify me right here. And it did. Right around there. So I added another $100 to my position. Now my average buy price is somewhere in the middle right here. We're getting further away from that treasure. The deeper the cave, the bigger the payoff at the end. I go, all right. I set notifications for every additional 2 or 2.5% drop. See, another 2.5. The next buy-in price would be right around there. I throw another $100 at it as we're plummeting, and we're getting new yellow X's that get rapidly cleared, but we still have one up here that has not been touched yet. Okay, so I'm riding this down, and my last buy was, I think, another 2.5, so it was like right here-ish. This is a position I'm currently doing right now. So we've gone back up to one of the early ones, along with Bitcoin, and I'm just sitting on this one. I'm not in that deep, but the potential payoff is huge. So my average buy price is down here somewhere now. Our goal is up here. That's an 8.5% jump. I'm doing like 6 to 8x leverage on this, putting in $100 at a time, theoretically. I actually do a little more than that now because I started with $2,000, so I was only doing $100 at a time. Now I'm doing about double that, for reference. I've done roughly 140 trades, and 137 have paid off. The 3 that failed were my fault because I stretched myself too far. I was doing stuff like this, but with like 6 coins, and they all dumped at the same time, and I had to eat my hand to keep myself alive. So one of the major pitfalls is doing too many of these at the same time. Because every once in a while, there's a mega dump, and you're going to have to keep feeding this monster a little bit over time to keep yourself in the position. You want to utilize these alerts big time, okay? If you're not doing that yet, here's what you want to do. Otherwise, you have to sit here like a psycho and never go to sleep. You got to go to sleep at some point. So if the price is, where are we now? Right here. If we drop like another 2.5%, something like that right here, I want a notification. So I'm going to right-click that area, add alert. Price crossing, whatever that, 1895. I'm going to put once per minute. I'm I'm going to create that alert right there. So this dotted line, if the price gets to that, my computer and my phone are going to start beeping like crazy until I show up and review what's going on and maybe add to the trade a little more to bring my average buy price even lower. That's the idea. What you don't want to do is you see it start going up and you get greedy and you start adding to the position as it's going up. We do not want to do that with the yellow X strategy. You only add after a major dump, like when you fall down another rung, a couple percentage points. This does not happen very often. This is a beautiful scenario for the yellow X. I want this to dump as hard as possible because I know it shall return where it came from. It might take a few days, so you got to have the calm confidence and resource management to be able to wait it out. But let me show you an example of where this paid off beautifully. So I started way back here on this one. Yeah, so I started back here, saw the first X, and I saw it dump. This is an uncleared X, so I marked it with an orange line here. It dumped about 2% or so from the yellow X. That's when I get interested. So my first entry was right here. We dumped another 2%. I added another $100. And then here, it was just above my next target, which is like 154. Didn't quite meet it. So my average buy price is sitting right around the middle somewhere, right in here. And I watched it go all the way around. This is almost a full day here. And we came back up. We reached that X. And I made some money. I took the profit. So the difference was, boom, boom. About 3%-ish on 8x leverage. That's 24%. Pretty good money. And that whole thing took me 1 day and 45 minutes. Not bad. Then we started going up, and I could have stayed in the trade, but I just didn't. I didn't want to get greedy. But I did have an uncleared yellow X way back here at 189. And I don't know if I can even scroll back that far. Here it is on the 15-minute, but it was also on lower time frames. That's when I marked it. So I've been sitting waiting for this to happen too. And it did come all the way back to it. It just took, let's see, 19 days. That's a long time. That's why I generally don't do the yellow X strategy looking at higher time frames, like even the 15-minute. So the 1 and the 5-minute. So I was doing tighter ones on lower time frames, knowing that we also had one that was much higher up here. And sure enough, we got through that as well. It just took a while. But we did return to that yellow X. So even if I was crazy enough to get in way back here, if I'm adding to the position every time we drop another couple percentage points, the biggest thing is low leverage, because look at how far we actually fell. Like if you're on 20x leverage, you're doomed. So low leverage and space out your buys. You want the biggest, scariest dumps possible. Like every few percentage points, I add a little more. I didn't do the 15-minute. Like I said, I was doing the 1 minute, the 5-minute, so I didn't have to go this deep into the cave. But man, the yellow X doesn't lie, man. The price does return to it. And that's potentially a massive gainer, depending on what your average buy-in price was. But that's what I've been doing all month. Now let's see if we can find a fresh yellow X scenario. So I'm going to go on the 1 minute. Hey, look at that. What do we have here? Let's see if I can zoom in a little better. Is that X cleared? No, it's not. It's not cleared yet. I'm going to mark this one with an orange line. So that's my price target. Now that's not a big enough change for me to be interested. 0.27, that's not good enough. But if the price were to drop like 2% or so, which is a lot for Bitcoin to be honest, I would have an alert right here. So let me actually one more time, let me see what that was. If it drops 2% from that yellow X, that would be 59.1. So I'm going to put an alert right here. Add alert, 1 minute chart, 1 per minute. There you go. Cool. So assuming we don't return to this and clear it, this yellow X is still a viable target. And I'll start entering once we get to like 59.1, if that happens. But also, look at this. we have uncleared targets up here, too. I don't know if I can even scroll back this far on the 1 minute or the 5 minutes, so I'm going to try a bigger time. Okay. Yeah, it doesn't quite line up on the 15 minute, but on the way I mark things is on the 1 minute or the 5 minutes. So I know there's a yellow X in both of these spots that has not been cleared yet on the lower time frames. So I know with a 99% certainty that at some point soon we're getting back to these numbers. So I could enter along now with the target being these two, but patience is a virtue here. I want a much better entry. I want to see a real dumperoo. And so I'm looking at, Market Cipher B, and we have great money flow. It's kind of curving up a little bit on the 15. The 30's kind of fallen down, but we're just going to let this one play out. The 1 hour's tipping over. Okay, I might be able to stick around and get a better entry price, but I do have some targets, some close and some a little far, in mind, with a high probability of reaching them. This isn't doing a Fibonacci and hoping for the best. This isn't looking at the MACD and thinking it could do this maybe. These are targets that have been manipulated away from. It's pushing down on a spring. And when the manipulation lets go fully, natural price action returns to that number. That's the whole yellow X strategy. So we know where it's going. The strategy comes down to managing your resources to get the best entry point. Flokey's another one that I've been nailing some targets on. So we had some yellow X's back here that were uncleared. Came back to it, took some money. Another one that was here. Let's see here. On the Fiverr. This was uncleared for a while. Look at how long it took me to make my money, okay? So this took 1 day and 17 hours. Good heavens! That's a lot of 5-minute intervals waiting for this thing. So I saw a little bit of it, we're coming down, a couple yellow X's. I saw a second X, and I go, okay, we're not there yet. I want another couple percentage point drop. I started like here. So, let me see if I can mark this. Not the best entry, but pretty good considering how things turned out. So I'm looking, yeah, that's a pretty fat drop. Few percentage points, an uncleared X up here. We might go lower, but that's okay. So I entered right around here. Telling by my log, I'll bring that up later. But we did go lower. I had an alert for another 2% down. Didn't quite meet it. So I was looking for right around here. That dotted line. Because, I gotta go and get groceries and go to sleep, whatever I'm doing. But I have my alerts on full blast. If it hits this price target, I'll know about it. Didn't quite reach it. Came back up. Didn't hit my target. Almost did. And then we hit my alert. I added a little bit more. So now my average entry is somewhere in the middle here. It was $100 here and then $100 down here. So now we're a little lower. And we're chilling, we're waiting. Okay, we're coming back up a little bit. Boom! And we hit our target. So the profit was from vaguely this green line up to this one. 3.4%. I do 8x leverage on these. So it did go a little higher, but I'm pretty satisfied with that jump, so we'll take it. Our next targets are these uncleared yellow X's. We have one at 12.9 and about 13. So that's what I'm waiting on now with Flowkey. I got a fresh one waiting for that. And then Aptos. We have some room to run on that one as well. Uncleared yellow X all the way back here at 6.30. I'm looking for that. I had another uncleared yellow X that did pay off. So my entry was somewhere in the middle here. And I got about 2.8 on 8x leverage. I didn't get the exact bottom, but no one really does usually. So I saw this major drop. I watched it go down another couple percentage points. And I got in here. I had an alert 2% further from there, which is about here. And my entries averaged out to around rate like 575, 576, something like that. Sold off, and then I go, we got way more room to go. So I took another entry. And I'm going to see if I can ride this one up all the way to 630. What else is here? Look at all these orange lines getting cleared, man. So we had an uncleared yellow X all the way here at 135 with Solana. I watched it dump, dump, dump. New yellow X's. Okay. rode it all the way back up to where it started. So my entry was somewhere in this fray, my average entry, rode it back up to the yellow X. That's now clear. We do have an uncleared yellow X much higher at nearly 142. That's the price I'm looking for. But now all eyes are on just Bitcoin to see how it pulls the rest of the market up. But that's my yellow X strategy, is just find an uncleared yellow X with a fat dump after it, and every couple percentage points, I add a little bit to an entry. Like I said, a little bit. Sometimes you add a little bit, and it goes up, and you make $50, but it's free money. But sometimes those caves run deep, and the deeper and longer the cave, the better the treasure. As long as you can stay cool, and you got the resources on hand to keep the monster fed, because eventually it's going to crap out gold for you. And just a final tip and a little bit of a review here. Do not use the yellow X strategy on a token that is bleeding to death. Okay, we want something that has strong buy pressure and sell pressure. I want to see volatility and sustained interest, a lot of action in that token. So something like Solana is a good choice. Avalanche is another good choice. Look at these yellow X's getting cleared, me taking money, no problem. Bitcoin, of course, that's a great choice. When you see something like RST, a chart like this, one that has been bleeding to death for weeks, I wouldn't do a yellow X strategy on this one, because it could take months before you return to some of these prices. Maybe RST has a big swing, there's some new story, the new game comes out, everybody in the world buys it, and then we end up clearing some of these yellow X's. But look at these dumps, okay? Down 75%, what the hell are you doing? So don't do the yellow X strategy on a token that's dying. You want to find something that's healthy and volatile, and your yellow X strategy is a home run, man. It's so good. Again, to review, the time frame is a big deal. So I only do this with leverage on the 1 minute or the 5 minute. And the leverage is reasonable, like 6 to 8x. Because again, I don't know how deep the cave goes. I don't want to jump in Trader Geo style, like bam, 50x, let's do it. And then I get wrecked immediately, okay? So we're adding to the position as we fall in big chunks. Like, so you don't just add when it comes down a little bit. You set an alert for a major dump, like another 2% drop every time on these low time frames. And you'll see that this doesn't work as well on higher time frames. If you're on the 1 hour and you go, oh, he said 2%, right? Well, that's just a little squirt. But really, these swings on larger time frames are much bigger. So you're dumping not 2%, but like 10, 20, 30 sometimes. So I don't do leverage on anything above the 5 minute if I'm using the yellow X strategy. If I see a yellow X looking juicy on the 1 hour or something, I do spot or really low leverage, like 2x or 3x, if that's even worth my time. It's about controlling yourself, being confident that you'll return to your yellow X. Look at this. This even happened. How long did that take? It did take a while, but it did happen. 17 days. That's a yellow X on the hourly. That's what I'm saying. Do you want to wait 17 days in an upside down leverage position? You probably don't. No one's got that much hair on their chest. So if you see a yellow X strat playing out on a higher time frame, just do spot or very little leverage. The leverage occurs on lower time frames. Even then, keep it reasonable. Because even on a lower time frame, it can still take a while, okay? This is a day and a half, almost 2 days. Suey, let me see if I can find this one. This one had me by the balls, man. I was scared for a while. Yeah, I started jumping in down here after these X's in the 80s, and it took a few days before we could get back up here, and I wasn't that confident in the strategy yet. Like, I was down here waiting, and I go, what am I going to do? Am I wrong? And it kept going down, and I was freaked out, and 9 days later it hit the target, but I had already bailed and made a little bit of money back because my average buy-in price got so low after a while. I overextended, and I was referencing a slightly longer time frame. I didn't know the rules. No one told me the strategy. I'm coming up with it myself. So stay cool, super low time frames, reasonable leverage, space out your entries. You're leaving crumbs behind the deeper you go into the cave. You don't want to eat the whole sandwich right when you walk in. You might starve to death a week later in that cave. You got to conserve and spread out your resources because there is treasure at the end. We know where the price will go. That yellow X is going to get cleared 99 out of 100 times, okay? Now, I can't legally tell you it's guaranteed because nothing in life is, but damn it, is this close. So stick to your rules, stay cool. If you're not sure about something, ask me in the comments and I will help you.